Tuesday, February 14th, Stan Ehrlich market analysis. You know, I start out with the S&P 500 and the DIA QQQs and sometimes the Russell 2000. Today has been a fairly wild trading range day. Not what I'm used to seeing lately. Of course, I've seen it a lot of times over the decades, but nevertheless, on the left side here, we started out a little bit lower and then dropped off not too much, down to around 409.5 on the S&P 500 SPY Spider. Then from 9.5, it rallied all the way up to 1505 in a very short period of time. Now that's a obviously, and a half point rally. And it immediately dropped all the way back down 5 points to a new low by a small amount and didn't go further. Bounced pretty good. Then it went a little further. Now we have a low of 8.5, 408.5. And here we are back up to 12.75. So that's the detail for this morning so far. Now it's 10:35 California time. Let's look at the daily chart in the same light, knowing that it's been chopping around like crazy. And of course, you can ask me any questions. info@ersignals.com. Let's zoom into, well, first of all, we're looking at, of course, the bear market of 2022, ending in a giant head and shoulder bottom, I think. So far, that's correct. With the first shoulder in June, then the October 13th whopper. I'm so glad I talked about this 1 or 2 months in advance. The ER trading system, ER signals trading system, caught the reversal to the damn day it bottomed out, October 13th. And so far, the head and shoulder bottom is good. December 22 for the spider was the lowest low for the last shoulder low, and up we have gone on the average since. Typical downside corrections on the way up, no problem. We have now crossed the 200-day moving average, the Dow Theris long-term investor trading average, moving average, and it's been weeks. We've crossed over above the long-term bear trend line across the tops of the whole bear market, which could be in a downward slanting channel. Some people like that view I've got on the screen of a huge downward slanting channel. Anyway, that's bullish, long-term, and good so far. Plus, we have broken the neckline, very important, of the head and shoulder bottom, which, of course, was broken for the first time on January 26th. Rally into new high ground, came back, tested the neckline a little bit lower than I'd like, and then made new highs in a very good way, very fast. Too fast, got overbought. Now, that's 2 weeks ago. So it has had a little zigzag 1, 2, 3 down and had a low on Friday. Rallied up nicely yesterday, and so far I detailed what has happened today. We are down nothing to speak of, 1/3 of a point, which can come and go in a matter of a minute or 3, very easily, very quickly, guaranteed. What I want is for this market to have more strength today, close higher on the day at a minimum, closer to the high of the day so far, which is about 1505, I believe it was, 415, let's call it, which would be very close to the second highest close for the whole trend, and pretty darn close to the highest high for the whole darn trend, which is 418 and change. That means if we close at 15, you only got 3 more points to 18, of course. And you'll be making a new high, what? Since way back in August. Great. Remember, this pattern is big. You don't see them every day because it's big. I've seen, I won't tell you, many of these over 52 years. And I like what I see so far. Even if we do close somewhat lower, as long as it doesn't have any crash by the end of the day, making new lows, et cetera, et cetera. Certainly not below Friday's low. That's not good. That would imply, by the way, a move down to about 399 if we get below Friday's low. on a closing basis. Don't expect that whatsoever. I do think we're going to close in the green, higher on the day, maybe close to today's highs. I would not be surprised to see a higher high. My opinion, I've been wrong once or twice. Now, let's go to the DIA. Hey, we've got some good looking news, sort of. We have new highs here for weeks. It broke, past tense, above the top of what I believe to be a pennant formation that started developing, I could say November, in December, early December. Nevertheless, we have dropped down below the top of that pennant formation again this morning, and currently trading a little bit below the blue line I just put some little white dots on. I want it to close above that blue line. I want it to close above the high of yesterday, which is also the close. And that'll put it on a new high close since what? January 13th, a month. And we have already made slightly higher highs going all the way. Now the highest high today is since December 14th, exactly 2 months ago. So if we can get back there or higher, it's great. New highs, new high closes for 2 months. So that's one of the barriers it's having a little problem with, is staying up there at 340, 330 or higher. I'd love to see 344 or more. And I would not be surprised if it happened today, but we'll see. Now the QQQs. Yep. On the daily data chart, everything looking okay. Are lagging behind, interestingly enough. I just told you the DIA is making new highs for 1 or 2 months, maybe, and so on. This is only new highs for 3 days on today's daily data chart on the QQQs. It is breaking a little line you could have drawn. I didn't, sorry about that, across the tops of the last 2 weeks. Nice, kind of like the other lines I just referred to in the other charts. It did bounce off a big red support area. I probably should turn that green now that it's above it. I like to use green for support and red for resistance. And it used to be resistance back here and back here and back here and so on many months ago. So it's profound. Now, for a couple of days, or actually a couple of weeks on the average, we're staying above that. Let me remove this alarm line here. Since the markets are dipping just a little bit. Sorry about that. Let me see if I can ignore it. So I like what I see. It needs a little more oomph, like the rest of them. Today, I hope, to look better. Obviously, the higher highs we have, the better. By the way, I have to mention that we are not anywhere near overbought on any of these major indexes. There's plenty of room here for a very strong rally for a few days, probably maybe into the end of the week. It's only Tuesday. And I'd love to see that. Again, I don't want anybody to get below and stay below and close below the low of Friday. I think that was a turning point. I was unable to discern at the moment that it happened, or the day it happened. Hey, let's go look at the 2000 for a second. That is very interesting lately. On a long-term basis, the 2000 came back into one of my major support areas, dropped into it a little bit on Friday's lows, jumped right back out of it again like a ping pong ball being pushed underwater and let go. I've mentioned that a few times, one of my little sayings. And we're not down for the day very much at the moment. Again, we have 2 hours and 15 minutes to go, which is plenty of time for a disaster or great stuff, one or the other. Okay, nothing wrong here. New highs over time, breaking through major historical resistance areas, breaking major bear trend lines, coming back, testing, holding, support came in, enough buying came in to drive it into new high ground. Hey, this is the way bull markets act. They stair step their way higher. Bull markets climb a wall of worry. They don't go up anywhere near as fast as bear markets collapse. So good for a bull market. I believe, and I've said already many times, that we are in the beginnings of the bull market of 2023. Now let's go to futures. I start out with, well, I got these a little mixed up today. I'm going to go through the whole bunch for you. Wheat, boring, next. High-grade copper, got overbought and then oversold sideways to trend higher, next. Natural gas, this could be a very significant bottom. It was oversold very substantially recently, and now it's starting to flatten out. I'm looking for a pretty good rally in the short term, but the major long-term trend has turned down. So rally and then down, maybe to new lows over the last few weeks or next few weeks. And maybe a couple of months. Next chart, live hogs. Not much to say here. Cotton sideways, boring. Next, live cattle. I've been bullish for a long time, still am, close to being overbought. So don't chase a bull market, but it's not overbought, so there's a little room up more. Next, coffee up a little bit more. Sugar, no comment. Crude oil. If we are able to make new lows, and I think we will soon, this is a major long-term breakout to the downside and very bearish. I'm long-term bearish on crude. Short-term, I think I should be slightly bearish as well to cause the long-term bearish breakout. OJ, well, I mentioned last week it was incredibly overbought. And watch out for exactly what is happening now. I expect it may come down a little bit more to the beginning of support and maybe down into 211, but it could try to turn back up around 223. Right now, 3180. Next, trend is up, obviously. Head and shoulder bottom is a dead issue. I'm deleting that neckline hypothetical. And neutral to friendly, but we're not too far from overbought. Next, heating oil. Same kind of comments about heating oil as crude, and we did get a bearish engulfing ER sell signals at the top of the damn rally on January 24th. Exactly why this trading system has been developed is to pick major tops and bottoms, intermediate, short-term, long-term. And there's another one back here, June 17th, 22. And some very good sell signals. They're not supposed to necessarily last a long time. It was developed for swing traders. So if you get into a profit, even hourly, then you have a profitable potential. And I'm not surprised. I've seen this happen for well over a decade, that they last for months, if not even longer than that. We got some sell signals at the top of the bull market after COVID, and it was a high day at the beginning of the 2022 bear market to the day. And all over the place, we got October 13th, which was the bottom, to the day. Next chart. Sorry about the sales pitch. Gold. We got the top of the market on gold recently. Here is a new, today's a bullish engulfing. All right, so obviously I've seen this for the first time this morning. At the moment, we're slightly higher, not a lot, but that doesn't really matter as long as you stay higher on the day. We have an outside up day, bullish engulfing, and we also have oversold conditions. So we have an official ER buy signal if it stays green on the close. Otherwise, it's nothing really. And if that's true, and I cannot, fight my system, then this sell signal didn't work that well, but it did drop the market down, and you had plenty of opportunity to cover your shorts in the last 1, 2, 3 days since that sell signal. But that sell signal on February 2nd was the top of the whole damn rally and the beginning of the break that we might be seeing a bottom of right now. What's the trend here? The overall trend since this triple bottom last fall, September through November, has been up. And it was pretty much past tense. That's it. The bottom of a significantly longer term bear move since March of 22. Yep. So we didn't get a sell signal up there, but we did get a buy signal at the bottom on the first of the triple bottom lows. And since then, we rode it all the way up and we have a sell signal. here, but the trend is up. So should you be following buy signals more adamantly and mistrusting a little the sell signals or using them for whatever purpose you want? Probably. I have no way to prove that that's true, but it seems logical. Next chart. Corn. Next chart. E-mini, S&P 500 futures, as well as a index. So that's why it's here. Of course, we got October 13th, the October lows, and the bottom of the head and shoulder bottom. We have been breaking the neckline. We haven't had any significant violations. It depends upon how you draw the neckline. You can see I'm not going across the top of a particular day here, which normally you would. I lowered it to what level I thought would be equivalent to the same reference point to the spider SPY. And that worked out okay. Even if you raise it up here to where it should be, you tested it, broke it, came down, tested it, and now going up also. So in either case, I'm going to leave it this way. It's working fine. All we need to do is stay higher on the day at a minimum, and the better, stronger, higher, quicker will have a major upside breakout, perpetuating almost everybody's opinion that the market has turned. Pretty much past tense. But we did catch the October lows, the bottom of the market. Unbelievable. I don't do that very often. Now, cocoa trend is up for several months in September, looking for higher levels. Next, platinum. We caught the top of the market to the day, and that was weeks ago, way up here, and on January 11th, a month ago. Today's a lower low again, and a lower close again. But I keep telling you, don't go short when you're oversold, which we are. I'm expecting a very little rally short term, maybe through the end of the week. I'm not sure it started today, but being oversold tells me it's about to turn up somewhat. Let's see what happens. Next, bean oil, trying to hold support, but we have this downward pressure that's not changing yet. It might if we rallied pretty good, but the bear trend line across the tops I'm referring to. We have a support level established by a previous bullish engulfing that worked very, very well. Neutral to bearish on this. Watch out for a sudden downside breakout. Could get real bearish real quick. Next chart. Bond futures, of course. We have an outside trading range day, and we were oversold within the allotted amount of time. Now, if this is able to close higher on the day, it will turn green. It will be an official buy signal. Right now, no. Is it super bearish? I can't say. Nothing particularly important about it unless it turns up and closes higher on the day. That's totally different. That is an official ER signal, buy signal. What about 10-year notes? Same thing, overbought today, oversold today, outside trading range, but a lower close potentially. Needs to close higher if I'm going to get a bullish engulfing buy signal, which would be very encouraging. Next, oversold on silver, looking for a buy signal for a short-term rally. Next, wheat. I think we started out here. I do want to mention again that we got the top of the market just after the war started a year ago. And holy moly, that is an incredible pick to be a official ER sell signal after, what was it? Limit up, limit up, limit up, limit up, limit up, limit up, limit up. Well, maybe the last one wasn't a limit up, but wow, we got a sell signal at the top. Huge crash over the next couple of weeks. Another one back here, not the top of the market. Our signals frequently occur at the highest high and the lowest low for months past and months to come, sometimes only for a short period of time. And of course, there's those that fail, but we always have a protective stop relatively close by and never take, well, I can't say never, super rarely take a significant size loss. Ask questions, info@ersignals.com. You have a great trading day. Thank you very much, Stan Ehrlich.